fiat currency is inflation itself, and it actually kills the economy. I think there's a much better chance of seeing stagflation than going back to Goldilocks. That's what they used to like calling in the 90s and up until recently.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Our guest today doesn't really need an introduction. I'll just do a short one here. He is Mario Innecco from the YouTube channel Innecco64. Mario is a first-time guest, so we're delighted to have him. It's time to saddle up and silver up for Mario Innecco. Mario, welcome to SBTV. How are you doing?
I'm doing well, Patrick. Nice to be speaking with you. How are you doing?
I'm doing okay. Nice to meet you. I see all of that great content that you put out, and I said, hey, I think I really want to meet Mario, and there you are. So thank you for coming on board. Before we start, since you are a first-time guest to our channel, could you tell us a little about yourself?
Yeah, I was telling you before we started that I originally from Brazil, so I grew up in Brazil, and in the 70s and early 80s, and there's a lot of inflation, is something that I always like kept in mind. And I started working in the financial sector back in the late 80s in Switzerland, after having gone to university in the States and Switzerland. And yeah, I did economics and international relations. I did not a master's, just a BA. The professors wanted me to do a master's, but I thought I wanted to go to work. And yeah, that's my background before I started in the financial sector. I worked in Switzerland for 3 years for a small private bank, and then I came to the city of London to work as a futures and options broker, mainly doing government bonds. And I got involved in looking at gold only in 2002, because I bought some Krugerrands, and then I started to look into gold because once you hold that coin, it's really special and it's nothing. I mean, I encourage people, if they haven't, to buy one just to see how it feels, and then it just drums up your interest on about things, and you learn that gold has been part of the monetary system for thousands of years, and that right now we're living in aberration. And I've always thought that. Yeah, you go to university, you get a degree, but you never stop learning. I'm always reading a lot and stuff. And in 2012, my career in the city, I guess, ended. At the time, I tried to keep it going, but the firm I work for, they closed the desk that I work for. And I tried a few things. And then in 2015, I saw that YouTube was something that was coming up. And I used to watch a few people, and they used to do quite well. And I said I could do that. And then I decided to basically start my channel, Innecco64, and focus on the financial markets, economics, gold, sound money. And I decided also to speak a little bit about the markets as I used to speak with my professional clients in the city. So to try to explain the general public uh, the ins and outs of bonds, currencies, because I think most people think it's complicated, but I don't think it is. They try to keep it complicated, and they use a lot of arcane terms, but it's basically very simple. And I think they do that in order to keep people blind to the fact that the system we have is really not fit for purpose. So that's what I've been trying to do, wake people up about it. So I've been on YouTube since late 2015.
I want to start off with going backwards in time. I want to start off with the thinking of a 1930s style Great Depression, perhaps on the way. Mario, in your view, are we once again perhaps on this path?
Yeah, it's very possible. Even though back then, the United States and the whole of the Western world were more under a sound money system, even though Europe had kind of left after World War One. So the powers that be back then didn't have the wherewithal to do all the QE that they've been doing the last 15 years. So they had to. Yeah, like FDR had to confiscate Americans' gold and then revalue it a year later. And also, if you look at the Great Depression, you have to go back to World War One, in my opinion. And World War One, they wrecked the gold standard in Europe, so they could finance that war through printing money. And then the U.S. came in and they inflated as well, even though they didn't. Take the U.S. off the gold standard, but that led to the boom of the 1920s, and I think the New York Fed and the Bank of England were instrumental in orchestrating that bubble in the 20s because the New York Fed was keeping rates artificially low so that the pound wouldn't get would stay at a level. They went back to gold. Churchill was the chancellor, and they went back to gold at the rate prior to World War One, which made no sense because the British had printed so much, borrowed so much, they should have devalued. And I think by doing that, keeping rates artificially low, it led to that roaring 20s. And then eventually, when they raised rates, I think it was in 28, it led to the crash. And a lot of people think that people lost a lot of money in the crash, but I think people lost more money when the banks started failing in the early 30s, and that was triggered by the failure of a big Austrian bank called Credit Anstalt. And yeah, back then, as I said, they didn't have a way to print money. The Fed wasn't as hadn't evolved as much, didn't have as much power to just print currency out of thin air. The government wasn't as big. So yeah, it is different, but the thing is nowadays they've created so much currency and credit that yeah, it's between a it's there's a fine balance, and they could keep inflating it, but that could trigger a currency collapse or hyperinflation or crack up boom, or if they go too far in trying to deflate, it could trigger a deflationary collapse. So I think both are possible, and I think in either case, you want to have something outside the system because counterparty risk, bankruptcies could be massive under a deflationary collapse, and under hyperinflation as well. The currency will become confetti. Uh, if I had to bet, I would say politicians nowadays and even the public, they're more used to inflation. They don't realize that it's inflation, but they always want government to come and help. And I saw that in the UK. They did a survey in 2022 that showed that the public in the UK wants more and more government. They want the government to regulate. They want the government to bail people out. They want the government to invest in private industry. And apparently, according to this survey, it was because uh, during 2020, 2022, during the lockdown and all the interventions, people thought that that was a good thing. So that's why I see most probably hyperinflation, even though it would have the same impact as a deflationary collapse. I think it would destroy a lot of debt.
If you're enjoying this interview with Mario Innecco and I, please consider subscribing to our YouTube channel. And did you know that when you store your precious metals with silver bullion over in Singapore, it comes with a genuinity guarantee? To learn more about this genuinity guarantee, please go to www.silverbullion.com.sg, click on the storage tab, and go down to and click on genuinity guarantee. A lot of great points there. We're definitely going to touch on a few of them as we go on. But during that time, you mentioned President Franklin Delano Roosevelt, and it was interesting because he basically made it illegal to own gold. Why, in your opinion, did it become illegal for we the people to own gold? Yet during that time, gold was probably the most important monetary asset.
Well, the way he was able to do that was because of the one of the laws they passed during World War One, the Foreign Enemies Act, and that was used to incarcerate mostly like Germans and people from the German Empire that were resident in the U.S. because they got into the war against Germany. And yeah, that's what politicians always do. They use old laws that stay in the books. And then and why do they do it? I mean, because the most important monetary asset then, and it's still now. Well, because the Wall Street banks, I would say, and maybe some other banks, they uh, they they lent too much currency without gold backing. And back then, they had to have gold backing. You could go to the bank with a $20 note or a $20 gold certificate and get your coin. And by 1933, when he came into office in March, but at that time they did the inauguration was in March. The banks were going under, and people were rushing to the bank to get their money out, their gold out. And if he hadn't banned gold ownership, a lot of the New York Wall Street banks would have gone under. And I think his background was in banking, so he was helping out. His friends, I would say, even though a lot of people think FDR was a great president. I think, he betrayed the American people, even though I'm not American. He by doing that, basically taking their money. I don't think everyone handed it in, but taking the money and then making it illegal, and then about 9 months later, coming out with the gold Reserve Act of 1934 and revaluing the value of the ounce of gold to like $35 an ounce. So he basically confiscated, ripped people off, and then revalued. And the other thing as well is that after the bank holiday, he closed all the banks as well. I think for 4 days when he came into office, so people couldn't go take their money out anymore. And then he did the confiscation. And when things settled down, he only allowed certain banks to reopen. So a lot of banks went under. The banks that were probably supporting him didn't. And I guess he had to do something to placate people a little bit. And I think that's why he came up with the New Deal, because I think there might have been a revolution in the US if he hadn't. And some people think that that was a good thing, but here we are now. What is it, 80 years later or a bit more, and all those unfunded liabilities. That all started with the New Deal and FDR.
Wow. So true, so true. Amazing time back then for sure. I mean, but back then, I mean, before the Great Depression and such, people actually had gold in their pockets, gold coins and such, and gold was being used. It was money. It was circulating. Today, it's not. It's not. So, I mean, therefore, it kind of brings the question: we had that Confiscation Act back then when pretty much everybody had some gold. But do you think we'd see another type of confiscation event today?
Yeah, that's a question that a lot of people ask, and there's a lot of people that are concerned about that because I think that Executive Order 6102 is still in the books, or even if it isn't, they could still uh, bring a new one into existence. I don't think the Foreign Enemies Act is off the books from World War One. That's the thing, when you have crises, like we had in '01, they bring the Patriot Act, and they always keep those things and then they use it against you. But yeah, anything's possible. But I've heard someone say, Clive Thompson, actually, who I've interviewed, he said that he thinks if they confiscate this time, they'll go for the gold in the GLD ETF because it would be a lot easier to get to. But I'm not so sure because that GLD is controlled by the big Wall Street banks. But like you said, nowadays very few people even would recognize if you show them a $20 gold piece, double eagle or an eagle. They would, there's a guy, what was his name? Mark. Yeah, he's gone and offered people gold or a Snickers bar, and they take the Snickers bar. So yeah, confiscation, I'm not so sure. I think what will happen now, they'll just revalue the price. Back then, they had to do the confiscation because it was part of the system. Gold was monetized. Now it isn't.
And so when the confiscation event happened, it was sort of a launching pad for gold. We saw gold move up a bit, and then we saw gold move again during the 70s and 80s. Of course, that had to do with Nixon closing the gold window, but also during that time of stagflation, that stagflationary period. I want to ask you though, do you think we may be heading down the road to where we may see another stagflationary period, the simultaneous appearance in the economy of slow growth, high unemployment, and moderately high prices?
I think at least here in the UK, we are in a stagflation already. I mean, our GDP is below 1% annualized, and if you look at the budget deficits, even in the US, they're running at more than 5, sometimes 6, 7%. And if you look at the equation for GDP, it includes government spending. So if you took out all those deficits and balanced the budget, our economy since 2008, 9, they'd all be in a recession. And now with CPI going up, yes, I think we're definitely in a stagflation already. And even in the US, if you look at the way CPI used to be calculated, and also the GDP. It's all, they can tinker with the numbers to make it look like there's growth. But if you look at, the bottom 90%, especially in the US and the UK, where, people are a lot worse off now. Yeah, so stagflation is very possible. And I remember in the 90s and still looking into the 70s and uh, when I read about that, the 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 main point people used to make is that the economists in the 70s didn't they couldn't understand how you could have stagflation because you had a couple of recessions in the 70s. Unemployment was high. How could you have prices going up? And I think it's because they don't understand money, the Keynesians. They don't look at money and the fact that fiat currency is inflation itself, and it actually kills the economy. And I think we've done the same now. And again, I see a lot of people, even professionals in the investment world, expecting bond yields to drop again to 1 or 2% if there's a recession, and I think they'll be wrong. So yeah, I think there's a much better chance of seeing stagflation than well, going back to Goldilocks. That's what they used to like calling it in the 90s and up until recently.
Yeah, I think Goldilocks has left the building. She she ain't coming back. Um, but I wanted to ask you though, do you think we may be headed towards another period of stagflation? I mean, I think it's pretty obvious. Let's say the U.S. may have about the stagflation, but do you think something like this could end up being a global type of an event?
Yeah, I guess so. I mean, but some people think China is going into a deflation. I'm not too sure about that, but I see that the Chinese CPI is quite low. I'm not sure how reliable that number is, but and the BRICS countries, they are trying to get away from this fiat currency, maybe not the fiat currency system, but the dollar system. They don't want to. They want, I think, trade and capital flows to be based on real activity and commodities and producing. Because since 1971, uh, the Americans with the Federal Reserve, and the Treasury, they're the ones who decide how much trade there's going to be because they can just print and create currency out of thin air that has to be taken. So, in the short term, maybe they might get hit by stagflation, but uh, and I'm not saying the BRICS are going to be perfect, but they're trying to move to a more balanced system where not one country can just impose their will through printing money. Uh, and hopefully, China won't try to abuse the system because they are probably, the biggest economic power. So yeah, that's what I think. I think there could be a little bit of stagflation everywhere, but I think it's mostly going to be the U.S. and its satellite, countries, NATO, Western Europe, Japan. Japan, people go on about Japan being in a deflation, but their CPI is like 3 or 4%, and you're getting nothing for your JGB yield there. So I think there's stagflation in Japan too. Gold wouldn't be going up so much against the yen if there wasn't stagflation.
That's a great point. Another great point. I agree with what you're saying. I mean, the economies today. I mean, it's pretty hard to believe the numbers coming from any government with any economy right now. But Mario, you touched on the Fed. I mean, where does the Fed go from here? I mean, can they fix things with higher rates? Can they keep people employed, or will they go back to money printing and inflate the markets and keep zombie companies alive again? Or do they just let the whole house of cards fall and start over?
Well, yeah, that's a good point there, your final point about the House of Cards. They could do that and start over, but would they be able to start over? Would people want the Fed, a central bank, if that were to happen? Don't forget the Fed was created to solve these problems. They're supposed to create an elastic currency, stop all the bank runs, and it has anything but done that. But I think the Fed, I think last week there was like one of the days last week, it could have been Thursday or Friday, there was 4 or 5 Fed speakers, and they're getting more and more desperate. I don't think they know themselves what's um, on the cards. So they keep saying, oh, we will do that, but we have to see, they have no idea. And personally, we have to see, over the weekend, we just had this thing kick off in the Middle East, and this could be an excuse for them to come in and pivot. And why would that be an excuse? Well, because it's very similar to 1973, and what happened then was that, the Yom Kippur War that led to the price of oil going from $3 to 12, and it led to a lot of price rises, which people call inflation. And they could use that as an excuse. You see, and they could say, well, the economy uh, could could go into recession because of this crisis, and they'll have a scapegoat, of course, and then they could pivot and start printing again. But either way, it's going to be tough because if they keep rates high, or even keep raising them, I can't really see the system survive. We've already had those bank failures in March. There will be a lot of trouble. So it's hard. It's hard. But yeah, the Fed, I think they would rather start printing again and helping things, and they probably will if Wall Street gets into trouble, and also Uncle Sam is running huge deficits. We saw last week it went up. The debt went up by 275 billion in one day. It's really getting unsustainable. But you could be right, as you said, they could pull the plug on everything, and that would be the unexpected. But anything's possible, and that's why I keep my gold and silver, and I keep telling people that they need to have a little bit of it because in the 1930s, I know they confiscated it, but you still had silver. If you had money, only if you had money, you were better off than most people because if they let everything collapse, that means that there won't be any currency or money, and yeah, people are going to go hungry. They're not going to be able to find shelter. It's going to be disastrous. So if you have a little bit, it will be like having a lot.
Mario, you brought up a great point here because at the root of so many of the things today, it's money. Gold was money. Gold was removed from being money, and here we are, where paper and digits control our lives. And the key word here is control. Money controls everything. So, Mario, with central bank digital currencies, do you think this may be the new money that controls everything and everything, including you and I?
I think that's what they want, and I think you have to go back to World War I to see how the process has evolved. Because I think back then, we still had gold coins, silver coins, but they were pushing, I think, for people to use promissory notes, which is something that we call money now, and it was more convenient. It's much easier to carry some pieces of paper in a wallet than coins in your pocket. And I think World War I and then the Great Depression, confiscation, that was the first step from going into money and then convincing people that the dollar bill is money, and people even say that money is green, but it's not. Money is yellow or white. But so I think, it's always really, they do this. It's a slow evolution because I think if they try to do it all at once, people won't go for it. So it's been a long process. We still have banknotes now and coins, but they're trying to, they've done a good job of saying, it's much more convenient to use your iPhone or your, digital banking, and it is. But I'm afraid, with CBDC is just like going from gold and silver to paper, but now we're going from paper and some base metal coins to like what you said, it's just credit. It's not real money, and then they'll be able to control everything we do. And I think they already do to some extent, because at least here in the UK, there's so few banks, and I'm sure if the government wanted to find something out about someone, they would basically use excuses you know, uh, and even the banks, they're going right along with it. They're debanking people. So yeah, I think yeah, that would be their final goal. Whether they succeed with the CBDC is another question. I always hope that we can keep informing the public about the true nature of money, that it's got to be something that represents value, and that is something that is based, like the most marketable commodity. It should be. It's not something that the government says, and it's not something that government should be able to create out of thin air. And the CBDC, of course, would be the final frontier, I guess, for the bankers to control us.
Yeah, this could be a rough ride ahead. Hey, Mario, I just got one last question here. From all the people you've spoken to, you interviewed, who's the one guy that may have said something so profound that it always stuck with you, and what was it?
I would say Jim Sinclair. I mean, I was never able to interview him, and he passed away. unfortunately, a few days ago. But one thing he said is that I think a lot of people in the gold bug community, if you know, or sound money community, uh, need to do is he said, if you have gold and silver, you are your own central bank, and I think that's a really a good advice as well. And I had followed him since like over 20 years.
All right, those were yeah, definitely some words of wisdom there. So if you want more words of wisdom, go and head over to Mario's channel. But Mario, before we head out, can you let the people know how to follow you and get more of your views and insights?
Yeah, on YouTube, my channel is Maneco64, Maneco 64. And yeah, I publish a video virtually every day. I do a live stream on Sunday. And I'm also fairly active on X now it's called. It's at Maneco 1964. And I also publish on Rumble and BitChute, Facebook, and that's where you can find me.
All right, Mario Hineko, I want to thank you for giving us your time. It was really a treat to finally get a chance to talk to you. And I do hope we can do this again soon.
Sure, and thank you for having me on your channel. I always enjoy watching your channel too.
All right, thank you, Mario. Appreciate it. That was Mario Innecco from the YouTube channel Moneko64, sharing his views on the economy and gold and silver. To see more of Mario's views and work, head on over to his YouTube channel Moneko64. If you like this video, please do subscribe, share it, and give us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.